I'm Pastor Aaron Harris, and this video is about why your net worth explodes after the first $100,000. Gaining your first $100,000 is by far the hardest, and then after that, it is all downhill. It gets easier and easier. The more money you have, the more opportunities you have to make more money. One of the reasons that your net worth explodes after you have your first $100,000 is because you have more doors opened up, you have more opportunities, you have more options, and you have better opportunities and you have better options. For someone who only has a little bit of money saved, if you only have $1,000 or $5,000 saved and you're looking for opportunities and to invest that, then you're most likely going to be in some really high risk investments because you're trying to turn $1,000 into $10,000 or to $100,000, and you're trying to do it in a short period of time, which becomes very risky. On the flip side, when you have $100,000, you don't necessarily need for that 100,000 to explode into a million overnight. You can let it cook a little bit and give it time to grow over time. This allows you to take more moderately risky investments instead of high risk investments. These risk investments have a much lower risk, which means that you have a more likely chance of receiving your money back and not losing everything that you have. And so that's one of the reasons why once you get that first $100,000, then your net worth will just continue to be able to grow after that. In addition to the better options and opportunities, once you have $100,000, then you have the opportunity to participate in compound interest and receive compound interest from your investment, which means just by you investing that your money is going and it is making money for you, and that allows your resources and your finances to be able to grow exponentially. The S&P index is the most popular investment tool that we have. Many people retirements and money is tied up into this. And when presidents and the government and different economists and people try to figure out how our economy doing, one of the ways that they measure that is by looking at what the S&P 500 of some of the best companies in different sectors and how they are doing in America. And so when you look at investing in the S&P 500, historically it has given between 7 and 10% return. So let's go on the high end and assume a 10% rate of return on your $100,000 investment. After the first year of investing $100,000 into an index fund like the S&P 500, then what will happen is at the end of that year, if it got a rate of return that it averages, which is like 10%, then you would have $110,000. That means just by letting your $100,000 sit there for 1 year, now your $100,000 actually turns into $110,000. So you made $10,000 by doing absolutely nothing. And if you let that money just sit there for another 6 years, after year 7, what will happen is your money will turn into over $200,000. So that means you just took that $100,000, you let it sit in an investment fund for 7 years, and then after that, now it's worth $200,000. And if you let it sit there for about 16 years, then it would turn into over $500,000. And then 8 years later, it would turn into $1 million at year number 24. Then at year 31, you would have $2 million. At year 35, you would have $3 million, and at year 37 you would end up with like $3 million, over $3 million. And so when you look at it, your money starts growing exponentially as long as it is in there and it is invested. Now, in that example, that assumed that you took $100,000, that you put it in an index fund that averaged 10% a year rate of return, and you didn't look at it or touch it or do anything with it, and you just look, and after 38 years, then you have over $5 million. Now, that's a great example, and that doesn't even include if someone was investing $10,000 a month into that fund. Now, let's see what happens if, in addition to starting off with $100,000, if you invested $10,000 a year with that. Now, $10,000 a year is less than $1,000 a month. It's a little over $800 a month. So imagine once you have your $100,000 saved and invested, then every month you're investing a little bit over $800, which levels out to an additional $10,000 a year that's being invested. Then you can start seeing how your money begins to gain compound interest with you adding additional money into it. So if you start off with $100,000 and then you invest in an index fund like the S&P 500 and get an average annual rate of return of about 10%, then after a year, your 100,000 would turn into 110,000. And if you added additional $10,000 investment with that, that means after the first year, you would have $120,000. Then at about year 4, you would cross over the $200,000 marker, where now your 100,000 turned into over $200,000. In year 7, you would cross over that $300,000 marker. And then in year 11, you would have over $500,000, over $500,000 after just 11 years of investing $800 a month if you already had $100,000 invested. And then in year 17, you would actually become a millionaire. Now, some people, they think 17 years is a long time, but for me, if you started with 100,000 and you're able to just put $800 a month in there, and then after 17 years, you'll become a millionaire, that sounds like a pretty good deal. And then looking at year 24, you would cross over the $2 million mark. At year 28, you would have over $3 million. At year 31, you would have over $4 million. And then at year 33, you would turn around and have over $5 million. And so you see through this model how your money would grow exponentially and how you would become a multi-millionaire by starting off with $100,000 and just adding a little over $800 a month to that, and it will help you to be able to grow your finances and your resources exponentially. And if you kept on investing and you did that for 40 years, then you would have over $9 million, almost $10 million, make you a multi-millionaire. And so just looking at it, when people say that it takes money to make money, that's not always true, but it is definitely easier to make money once you already have that first 100,000. So that's why they say that saving and getting to that first $100,000 is really hard. But after that, it begins to go faster and faster and faster, because in addition to whatever income you're bringing in from your job, you're able to turn around and you're able to generate income for your investments as well. So my encouragement to you is to save as much money as you can and invest as much as you can to see how fast you can get to that $100,000 marker. And then once you get to $100,000, then just make sure that you Continue to invest your money frequently and wisely so that your money can begin growing exponentially and making money for you so that you can have financial freedom. And if you enjoy this video, then I want you to watch the other video, which is on this channel, which is all about financial literacy so that you can learn what you need to know to make great investments.